What's going on, Chris here? We're going to skip the Covey portfolio performance. I'm basically in last place. So I don't know how that works, but I got first place in December, and now I'm last place. And I still think this month I still have a chance at possibly getting first place. Uh, at least the top 10. That's we're gonna find out how close we need to get to the rate hike in order for us to actually get into the top 10. But right now we're really in last place, or I'm really in last place. Ninja portfolio performance summary. So we're just gonna show the view from Apex. So this is showing this progress bar. It's basically almost finished. So you, I think, need 7 days of trading, and then you need the profit target is 3 grand. So I have two accounts. They're really close to 3 grand, and then the bottom two are close to 1 grand. So I'm about to have two accounts passing the evaluation. Once that's passed, then I get a performance account, and I have to put that into profit another 3 grand before I can start withdrawing. And the good news is, uh, I was able to get this 3 grand in one day. It took 9 days of trading, but I was able to get almost all 3 grand in one day. I don't know how often that's going to happen, but it's still good news because if as long as we get some action in before a possible big drop, then we're going to be able to capture those profits. The elevator down is what we want to capture, and hey, if we get 10 grand on the way down, if we get 20 grand on the way down, I'll take it all, and that would put me in profit 3 grand, and then if we got 10 grand, I would have a margin of 7. If I had two accounts that had 10 grand profit, 7 grand net per account, 14 grand net total. That for one day's trade, that would be great. I would take it. Uh, but we'll kind of see as we go how crazy this gets. I'm planning to add more accounts, and I did the budget this week, and we're about to split up the funds. I just want to go slow when going after these accounts, like buying them, just because I want to make sure everything's taken care of, whether it's my food or my gas, making sure those get hit first, and then my money ball. This is considered my home run. This side gig home run, and the home run gets taken care of last, but the money ball gets taken care of first, and that has to do with my nursing. So just putting more investment in that and going forward there. But we're going to go ahead and go into the analysis of the daily closing thoughts. SP500 institutions are short. We'll start there. Second, we bounced off the weekly support or daily support, whichever you prefer. And then just to make it less confusing, we we're basically in this like no man's land. We're in the no man's land of the no man's land. So there's the outer range, and then there's the inner range, and we're just coiling. So technically, we haven't really made any real progress. We're just in the no man's land of the no man's land. It's just inside bars. This is technically a close within the previous week's range. So we really didn't go anywhere. And we're actually closer to a better risk to reward to short again. And if we were to just put on the bull trap, or in the bull trap, put on the faster version of that, we're in the bull trap. So we're going to see just kind of where we close. And if we close below these either moving averages right here, it's a moving average channel, so it's the low of the 10 and the 40, 10 period and the 40 period, then if we close below here, it's toast. And that's what I'm expecting this coming week, is that by the end of the month we close below here, because if we close below there on on the month, then it's highly likely we'll start trending to the downside, and this will become resistance, and the bull trap will have its full effect, and it will no longer be a bull trap if we close the week above here, and that's the hope for a lot of people. With when it comes to FX Evolution on YouTube, he sees this gap here on the week that's not been filled, and the thing is, if we were to go up into it, it's more likely that we're gonna close the week above here. But the thing is, that's what the bears don't want, and they're gonna defend that as hard as they can, because the moment we get a weekly close above here, it's gonna want to fill it, and it's gonna take its time, and it's gonna want to go higher. But the thing is, it's more likely not gonna happen, because we still got to get over this one. We still got to close the week above this one, and risk to reward wise, reward to the downside, and risk is to the downside. So you want to short. So we're gonna go to the daily time frame, and so there is also a gap here on the daily. This is the wick of the previous. We had a huge engulfing candle, and with an engulfing candle, you do the fair value gap, which is the wick low of the previous candle of the engulfing, and then the high of the candle after it, and then we get a range, and it's an imbalance that wants to get filled. The idea is, once it gets filled, we're gonna either expect high resistance right here, or we can continue. And so far, when this got filled on the day, we continued. We continued into the next candle. But the thing is, do we do that again? Are we expecting that again? And what this could do instead is it could fill and then get rejected right there. And that's kind of why I got that red line there. This is actually from the 12-hour right there for that support that got flipped into resistance by this candle. But it acted as support here on this candle. It wicked up and closed there. It acted as support here. It tapped it, and then it closed above. And then it tapped it here on this candle. And then it tapped it here on this candle, and it wicked and it closed above. So this is a very special level, and it also is the beginning of the fair value gap. And so that's 339.77 spot 80. And that's going to be where I'm looking at to get a position in short. We get a market structure break, 15-minute or 5-minute, up around there, I'm going short. And that's it. End of story. And that's going to be like a really good risk to reward for me. I just put it above wherever we had the market structure break. So that's the SP500. We're going to go into oil. Oil is looking like it's doing better. We did get a market structure break on the week, but you kind of have to wonder, okay, is this the deviation? Because we haven't had a retest yet. The break is the first step of bullishness. We have to have a retest and a resumption, and we just don't know. With it being so close to a possible reversal in the markets, I wouldn't bet on oil going long. That's my thought. And if we were to put on the traps, look at that. We're right at the trap. So it's a little questionable whether it's something you should go after. And then next, credit spreads. So we did close the week back under reclaiming that zone. Now it's resistance again, and it's formed a deviation. So now we're gonna probably retest, and we're gonna see, or we're gonna break down. It's one of the two. We could break down under here, or we can retest here, but we got to put in that right shoulder, and that's kind of what we're looking for next week, going into the close of the month. And LQDH though looks a little better, but it's not immune to the deviation. The euro and the Japanese yen, we could just look at it from MetaTrader on the 12-hour market structure break. So on the euro, I put a level here, and I put it at the top of this bullish candle as resistance, and it acted as resistance at the candle following it, and it acted as resistance for the candle after that candle, and the candle after that candle, and then the candle up here that wicked above and came back, and it basically shrunk back, and then the candle after that, it just didn't close above that level. So we're, as long as it doesn't close above this level, we will continue to believe that the euro will continue going down until we get invalidated. We need a break above and a retest and resumption. But the thing is, we haven't gotten any of those steps. We just gotten retests, and none of it's closing above. So we have to assume that because it hasn't moved on to the next step in the sequence, that there is no risk on with the euro. And the euro is closely tied to risk on with equities. So as long as this stays pretty much bearish or risk off, we will continue to act risk off. Japanese yen on the 12-hour, as long as this doesn't break the market structure right down here on the 12-hour, we will continue to act as if things are going to break down, because the Japanese yen is associated with risk off. And it's the combo. The combo is if the euro is starting to rotate to the downside and the Japanese yen is starting to rotate to the upside, it's bad. When the euro is pretty much going sideways and the yen is going sideways, it's kind of like it's neutral. It's okay. But it's the combo. Whenever they're acting in just a really risk-off manner, which is euro going down, yen going up, it's bad. You need to pay attention. Something's going on. We'll continue to monitor the VIX. It seems like it did what we wanted it to do, which was to bounce off of it so that we could move really fast on the equity markets on the SP500. Move really quick up there, and because it moved really quick up there, it made the institutions not want to get rid of their position. It looks like we were starting to move up, but because we didn't accumulate, we decided to just reverse right away. The institutions were like, well, it's moving really fast, so we're just going to keep our position on short. That's what the institutions said to the response of the market. And it's kind of just what I'm looking for is the bounce off of here. Good risk to reward to the downside. And we're going to see the earnings of Tesla Tuesday. And we're going to hear more news as to how the job market looks. With all the job losses, whether it's Microsoft or different tech jobs, we're going to see just how they're doing on their earnings call. And if they're doing bad, we're going to definitely see a response in the market, because Tesla definitely has a big impact on just how things go. So that's pretty much it. Stay safe. As far as crypto goes, I think It's doing well. I mean, we had a H12 market structure break, but it still has to retest. We have to see the weekly close, and that comes Sunday. So maybe we'll do a separate analysis of just the crypto and see how the week closes on that. But right now it looks like it's bullish. I mean, Jim Cramer's bearish on crypto, so it finally kicked in. I knew there was something. I was like, I feel weird about it. Jim Cramer is bearish on crypto, and I'm really scared. I'm holding crypto shorts, and it finally kicked in, and it's just something that's kind of biting me in the butt. But we're just gonna kind of wait it out and see how things go on this weekly close, and then we'll make our decision. All right, talk soon.